Right, so I just want to make the comparison so between this pre-paper lads and just a normal cash budget. So you're currently doing the 2010 cash budget, which is to do look something like this, right? So that's kind of, this is what a normal cash budget looks like, okay? So you're given like up here, cash, credit, credit suppliers, expected costs, capital costs and stuff like that, right? So standard enough. That's what we've been doing. This is the third example of what we've been doing for the last couple of weeks. So we have a look at this pre-paper right now. I know it hasn't come up until since 2009, all right. But if we take a look in this instance, we're asked to do a cash budget, but we're given a balance sheet. This can, like, just this layout alone can throw a lot of people off. All right. So the first thing that I want to do is, number one, acknowledge the fact that we have a balance sheet and how we go about approaching it, and the differences between what the ones that we're just calculated. Okay. So in this instance, we're given sales. All right. Now normally we have two boxes. We have sales and we have purchases. But in this instance, we've no purchases, right? Which obviously kind of means that we have to go about calculating purchases. All right, so like we're given sales here, and this is what all this information is going to lead up to the fact that we don't have our purchases, and we have to calculate our purchases. Now, this is an absolutely unrealistic scenario. It's a load of absolute. I'm not going to say it, but sure, look, like it's a question that might pop up in the cash budget. Sure, look, if once you hopefully see this example, you'll understand why. So, like, we're given 40% to sales, right? So, like, we can do no, this, I should address this first. Just what we're being asked is a bit different. A schedule for monthly cash receipts, okay, for sales debtors, 6-month budgeted period. Okay, so we're asked to do them in a number of different steps. Okay, so that's the first one is just the normal sales one that we would have normally done. All right, so which shouldn't be too bad. All right, next one is a schedule of payments for purchases. Okay, now we don't have our purchases, so we have to find that. And then part C then is a cash budget, right? So that's like it is a cash budget, and ultimately that's what we're looking for. We have to go about finding our purchases figure. So like we're given specific information here, right? So we're given the fact that 40% of sales, so that's just cash related, right? So if I just cash related. Now we're given other figures here. We're given our gross profit is expected to be 25% of sales, right? We're given our closing stock figures, okay? Sorry, our opening stock figures are going to be 20% of cost of sales. So ultimately, I have to find my cost of sales figure first, right? So for anyone who doesn't know what a cost of sales figure is, right? It's, remember, if I try and get one up there really quickly. Remember we were doing I don't think I'll be able to get one up here now. Remember, there are kind of incomplete records, but remember when we were doing any kind of profit and loss account that we would have been doing, right? So for like maybe an incomplete record or anything like that, we would have had a cost of sales. So we've been sales less cost of sales, right? So technically, if I have it here, I do, I think. So this figure here, like, is what your cost of sales figure is. So like that's cost of sales. So in this instance, we're given our sales, but we're not given our cost of sales, but we're given like specific figures as 25% of opening stock and stuff like that, 25% of cost of sales and stuff like that. So I got this laid out, and we'll complete this as we see it, right? So the first part is we want to do our sales, all right? So now, where we normally would have just done cash sales and credit, in this instance, we have a balance sheet that's dated the 1st of the 1st, which means our first entry that we're going to have is going to be debtors that owe us money from last month. Okay, so the debtors amount is going to be from January. So we're doing the cash budget from January to June. Okay, from January to June. No, so we're only doing it for this 6 months. So someone owed us money in December that ultimately we're going to get paid for in January. All right, so the first things first, if we do part A, which is just the schedule of monthly cash receipts. All right, so how we do it is, number one, get our debtors figure at the start of the year. So debtors, 1st of the 1st, and that's going to be 30,000 euros. Where do I get it? I just get it from that issue there, 30,000 euros. All right, so 30,000 euros, that's in there. All right, that's the only entry, lads, that I have for my debtors amount, because there's only one figure that I have for my debtors. right? Now, if we have a look down here, it says 40% of sales would be settled for cash. So like the first cash sales are going to be at 40%, and then they're getting a 5% discount on that. Okay, so cash sales, which is in the month, and then we've got credit, which is obviously going to be in the following month. Now, it doesn't say that in this question. It doesn't say that it's going to be the remainder is going to be the month after, but it should have. All right, credit month 1. Okay, so like I'm not going to have anything here. So like draw all my lines, because I know that's all going to be my total columns here. Right, so what I'll do is I have this little page here that I'm going to kind of do my workings on as such. All right, so it's telling me that I've got 40% of my sales. Okay, so my sales for January was 38,000 euros. All right, so I want to get my cash sales for January. So 38,000 euros multiplied by 40%. So 38 multiplied by 0.4, and I get 15,200 euros, right? They're getting a 5% discount on that rate, which is 760 euros, which means my cash sales in January is going to be 15,200 minus 760, and I get 14,440. Okay, so 14,440 is my cash sales there, 14,440. While the remainder I'll get paid in the month after sale as well. Okay, so the remainder, which is just my 60% of my sales figure. So 38,000 euros for sales. So it's just that sales figure there, lads. Multiplied by 60%. Why? Because 40% is for cash, which means the remainder has to be for 40% is for cash, which means the remainder has to be for credit. Okay, and that's 22,800 euros. And it's my January figure done, totaled up 44,440 euros. Okay, February then. Okay, so same kind of protocol for February. So that was for January. We'll do the same crack for February as well, right? So I'll just do a few. Okay, so this is for February. So I get my sales figure for February, which in this case is 60,000. Okay, 60. Multiply that by 40%. Why? Because the rate of percent in this case is 40% for cash sales. So 60,000 multiplied by 0.4, and I get 24,000 euros. Okay, now they get a 5% discount on that. And that's 1,200, which means they're only actually paying 22,800 euros. Okay, so in my cash sales for February, they pay 22,800 euros. And the remaining 60%, so if I go to my February and get my 60%, is going to slot in here then as well. So if I get my sales figure for February, 60,000 euros, multiply by 60%, and I get 36,000 euros. Okay, and that's my March figure. Now, I'm not going to do any more than that because that's all that needs to be done. So very, very similar. Now, if you look at the marketing scheme for this that was on the internet, it would absolutely confuse the life out of. So I wouldn't recommend you doing that. So I'm just going to fit in all these figures, right? Again, you can check these if you want. You can do them if you want. And again, lads, what I recommend that you do is keep track of your discounts, please. Again, I don't know why I have July in there. I don't need July. Okay, so that's literally job done. That's my sales part done. Okay, now the next step is so that's just, we do it in steps. Okay, so just leave that there for 2 minutes, and now we can move on. So like they want us to do it this way in steps. So part B then is the schedule of payments for purchases of the same period. Okay, now if you have a look here, is there purchases anywhere here? No. Okay, there's not. Now, if I was to work back, this is just an example. Right, so if I was to work back, right, so here I have my sales, okay? Now, opening stock, purchases, that's closing stock, gives me my cost of sales. Okay, now what I'm looking for is, I'm looking for this figure here, purchases. Now I'm looking for purchases for every month, not just the purchase. So this is just an example of how I work back, and I do this a lot in PASS with the ratio analysis with the PASS class as well. Okay, so I'm given specific details, right? So I'm given, in this instance, I'm given my gross profit. So I'm given this fella, all right? I'm given my gross profit. I've already have my sales. So there are two items that I already have. Okay. Stocks of goods will be 20% of cost of sales. Okay, so I have my opening stock and I have my closing stock. How do I have my closing stock? Because my opening stock in 1 month is my closing stock. Sorry, my closing stock in the previous month is my opening stock for this month. Okay, so the only item I don't have here is purchases and cost of sales. Now, where do I have it? Okay, that's fine. Gross profit. So what I want to do is, I want to find my cost of sales figure, right? And how I find my cost of sales figure, lads, is as so, okay? Realistically, it says gross profit is expected to be 25% of sales. So the first things first, right? I want to get my gross profit figure. So I want to get sales multiplied by 25% because 25% of my sales is my gross profit. Okay. If I take my sales, if I get my sales figure and I take away my gross profit, that leaves me with cost of sales. So if I have here, right, if I have this figure and I have this figure, if I take, because they're all going here, so for example, my cost of sales figure will go here, my sales figure will go here, which will leave my gross profit figure here. If I have this figure, if I have my gross profit figure and I take it away from my sales, it has to give me my cost of sales figure. So that's exactly what I'm going to do. So if we click back here to part B, which is exactly how I would lay it out, I want to find my cost of sales for each month. Okay, so we know how to do it. Okay, so the first thing we want to do is get 25% of my sales to give me my gross profit. Now, lads, the thing about it is every single month has a different sales figure. So to calculate our cost of sales for each month, we have to do it individually. So I'll do it here on this example page here, right? So this is for January. So my sales figure for January is going to be 38,000 euros. Okay, so 38 multiplied by 25% is 38, 9,500 euros, right? So again, following this formula. So next step, sales minus gross profit equals my cost of sales. So sales, which is still 38,000, minus what I've just calculated, which is my cost of sale, which is my gross profit, gives me 28,500. That's my cost of sales figure, lads, for the month of January. Okay, so in here I've got 28,500 euros. All right, so for anyone who didn't get it again, so again, I give them my gross profit figure. Once I can find my gross profit, I can just take that away from my sales to give me my cost of sales. So we'll do February, right? If we have a look here at February, right, what's my sales figure for February? 60,000, okay, 60,000 euros. So 60,000 multiplied by 25% will give me my gross profit for February. So 60 multiplied by 0.25 gives me 15,000 euros. Again, next step is take that 15,000 away from my sales figure. So 60,000 minus 15 gives me 45,000 euros. That is my cost of sales figure for the month of February. Okay, so 45,000 euros is going to slot in here. Again, I'll do it once more for March, and then that'll be March done. All right, so March. So I want to get 25% of my sales, right? So for March, I've got 60,000 again. It just happens to be 60,000. Multiplied by 25%, which is my gross profit, gives me 15. So 60,000 minus 15, as we just calculated there, is 45,000 euros. Okay, and that figure is going to slot back in beside here for March. Okay, so that kind of sums that one up. Again, if you want to rewind it, lads, there's no problem regarding that. Okay, so 36,000 for April, 42,000 for May, 54,000 for June. I don't know why July in there, it doesn't belong there. Right, so again, the ultimate, the purpose of this, lads, is we're looking for our purchases. Okay, so like we now have our sales figure, we now have our gross profit figure, we now have our cost of sales figure. So what we want to do is we want to work back to find our purchases figure, and how we do that is as follows: minus opening stock, add closing stock, and then that, if we do that, so if we minus our opening stock and add our closing stock, it will give us our purchases figure. Now, the reason I do it in the table, lads, is because we're doing it for 6 months. We're doing it for every individual month. Now, you could do it in rough workings, but it's more presentable this way. That's how we do it. Okay, so the next step is I'm looking for my opening stock, right? So what's my opening stock at the start of the year? In this case, look here, €5,700. What do I do with my opening stock to work back to get the purchases? I take it away. Now, is there any other information that I'm given down here? So we've done the gross profit. Stocks at the beginning of each month will be 20% of cost of sales. So the stock at the start of this month will be 20% of the cost of sales. So now, why, you're going to ask me, how am I going to get the closing stock? All right, my opening stock is 20% of the month, but don't forget, like your closing stock in January has to be your opening stock in February. So if I can calculate my opening stock in February, I can calculate my closing stock in January. So that's the only way I can calculate this figure anyway. Okay, that figure. Now the rest of them are all fine because we have to work back together. So if I read this once more. Stock of goods at the beginning of each month is 20% of cost of sales requirements for that month. Okay, so how do I do it? So it's just 20% of the following month's sales requirement. So €45,000 multiplied by 20%, so 45 multiplied by 0.2, and that gives me €9,000. That's my closing stock, right? Now, what's your closing stock in January has to be your opening stock in February, isn't it? How do I get I'm taking that away. How do I get my opening stock, my closing stock, sorry? I get 20% of March. So 45 multiplied by 0.2, and I get €9,000. Again, it just happens so that these two figures are the same. Okay, so it's not normally like that. So my opening stock figure in March is going to be €9,000. Again, I take it away because I'm working back towards calculating my purchases figure. So how do I get my closing stock? I get 20% of my April figure. So 36 multiplied by 0.2, and I get €7,200. So do you get it? And then that's my opening stock figure for here. How do I get my closing stock figure? It's my opening stock figure for May. All right, so if we fill that in accordingly. Take it away. 8,400. Again, that's my closing stock, so draw the line up. 10,800 again, and €11,400. Okay, so throw all that into the calculator, lads, and we get 31,800. 45, 4, 3, 200, 3, 7, 200, 4, 4, 4, 0, 0. And we get 54,654, 600. Okay, yeah, so that's kind of the story there now. Yeah, now what you could do is total all them up, so I'll actually total all these up at the end, all right? Now that we have our purchases, okay, next thing that we can do is, right, so we're looking to calculate, so like don't forget when we were doing the last cash budget, so now we can do this part. We can do 5 because 50% of the purchases are to be paid for immediate cash and on average a discount of 5%. All right. So that's kind of standard enough, right? So like we can't do this part 5 until I have my purchases figure. So just think of it as when we were doing an normal cash budget, we would have been given sales and purchases here. The purpose of this was to calculate my purchases. I now have my purchases figure. I can now find out when I'm going to get paid. So I'm told here that I'm getting 50% in the cash and I'm getting 50% in the month on credit. All right, now we have a balance sheet here. So I have the same way I had existing debtors here in my sales, I'm going to have existing creditors here. So the first of the first creditors, because that's money that I owe from last year that I have to pay for in January. Okay, so it's going to be 17,850. Where do I get that? Literally just there, look. 17,850. And again, that's the only creditors amount I'm going to have at the start of the year. Again, I don't know why it was July figure in there. The question tells us here that 50% of purchases are paid for immediate cash. So cash, and that's going to be the month after sale, and then 50% is going to be in the month following purchase. Okay, so credit, purchase, month 1. All right, so exactly like we've just done the sales, so we're going to be using these figures here because obviously that's just how we are going to do it. Okay, now I do it out here in this little working sheet that I have. So this is for purchases, and we'll do it for January first. Okay, so 50% is to be given in January. Okay, so 50% we'll pay for in cash. So my purchases figure, I don't even need that, sorry. My purchases figure that I've just calculated up here was 31,800 euros. Okay, now I'm gonna swap this page here, sorry, because it's just 31,800 euros. Okay, so 31,800. So how do I do it? 31,800. So this is for January. Multiply by 0.50, and I should get a total of 15,900 euros. So that's 50%. Okay, multiply that by 5% for my discount, and I should get a total of 15,900 multiplied by 0.05, and I get 795. So my discount is 795. Okay, which means take that off from my purchase figure, and I have to pay 15,105, 15,105 in the month for cash. That's excluding the discount, and then the remaining 15,900 euros, which is 50%, I pay in the month afterwards. Okay, if I do February, so I get my purchases figure here, 45,000 euros, multiplied by 0.50 or 50%, and I get 22,500 euros. Multiply that by 5%, and I get 1125. So 1125. Take that off from my 22,500 minus, and I get 21,375 euros. That's my purchases in month 1, excluding my discount. Again, so my month after sale is going to be the other 50%, which is just 22,500 euros. So you're well able to do this one, lads. Shouldn't be any problems with that. Okay, again, all the way to June, so I'm just going to fill in these figures really, really quickly. Okay, so March we had 22,800, the month after was 36. Okay, so 22,000, so March was... Sorry, no. So 43,243. So 21. Sorry, no, 2 seconds. A bit wrong. Sorry, yeah. So if it's to fill these questions first, so 32,955, which is fine, and then we've got 37,275. It should be 20,520. Sorry, let's if you do that correctly. Yeah. Okay, that's 43020. And in April, then we should have 21,000. Sorry. 17,760, and then 18,600 in May. Yeah, so if you total all those figures up, lads, you should get your total amount anyway. All right. So here we should have, in June it was 48,135. 48,135. In May it was 39,690. 39,690. And in April it should have been 39,270. Okay, so again you can fill in all those figures as you see them anyway, right? But they're your final figures anyway, that should be there, right? So once we've that done, then we move on to the cash budget. Okay, so again we're just taking, so sales are going to be taken from part A. So sales are going to be taken from this part A. Purchases are going to be taken from what we've just calculated out here. Okay, so purchases, and then the rest we kind of do as we see it. Right? So if I just fill in this as fast as I can now. Okay, so apologies, no. So sales for January was 44,440. 4,5,600, 58,800, 54,240, 50,000 and 80. Yeah, and then 60,906, 6960. So this is the normal standard budget now, lads, that you're well able to do yourselves. Okay, 314,120. Okay, so as you can tell, that's I've this part already done. Okay, this is just the way they kind of wanted it anyway. So purchases, I've already just done my purchases account there, and it was 32955, 32955, and 37275. So again, lads, all these are going to be taken from what we've just calculated, which was here. Okay, so that's my purchases, but this is the total amount that is payable. Okay, in my cash budget. All right, 43020, 43020, 39,270, 39,690, 48,135, 48,135. Total all those up together, lads, you should get 240,345,240,345. Okay, no, you're used to doing the rest of it. Okay, so equipment was bought on the 1st of January costing 30,000 euros. So I purchased 30,000 euros worth of equipment here. I didn't purchase anything else throughout the year, so my total was 30,000 euros. All right, rent. So if we have a look here, it says here that rent paid for 6 months beginning on the 1st of April is 2,000 euros. Okay, so just 2,000 euros goes into April. That's the only entry I have there, which meant my total was 2,000 euros in my total column as well. Wages, standard enough. Okay, so we've got that fella done, that fella done. Wages, we're just doing this fella now. So all the wages are in there for the 6 months. 6,500, 7,000, 7,800, 6,700, 7,200, and 8,500 euros. Throw all that into the calculator, and we should come out with a total amount of 39,700. 39,700. After that, then, okay. Wages, fine. Loan, okay. So read it out there. So we're going to take out a loan at 12% at the start of the month. Okay. So at the end of June, any borrowings will be fully repaid along with any interest due on the loan. Okay, so we've got loan and the loan interest, and it's telling us that we're buying it at the start of January. Okay, so we're buying the loan at the start of January, so that shouldn't be any problem at all. Okay, so like the loan was for the amount of 16,000 euros. I get 12% per annum on that. So 16,000 multiplied by 0.12, and I get 1920. Now that's 12% per annum, right? I'm taking out the loan in January, so if I just chuck in the loan there, bank loan 16,000, and I'm paying it back in June. Do I have it for a whole year? No, I only have it for 6 months. Divided by 12, multiplied by 6, and I get 960 euros. Okay, so my loan repayment, my loan interest, sorry, yeah. So I should have two columns here. My bad. No, sorry for this. I'll do that in 2 seconds. So what I do is I scribble out these lines and I'll just throw them down the bottom. So my loan repayment is going to be €960, and again it says paid at the end of the year. Okay. So it's a one-off lump sum payment of €960. That's fine. And then I've got my sorry, that was loan interest. And then I've got loan repayment. Okay, so the loan repayment, it says there that's going to be repaid in the month of June. All right, so €16,000 is going to be repaid at the end of June 2008. Okay, so €16,000 is going to be my loan repayment in the month of June. All right. Total here, €16,000. Right, total all these up together, lads. I know my lines are a bit very, very messy, but sure, look, what can we do? So, and you get 60,745. So this is just the total from here to here, okay? 43,775, 43,775, 50,020, 49,070, 46, 390, 72, 295, 329, €329,000. Okay, so throw double lines underneath all that. So you know how to do the rest of it, okay? So I know I don't even have to, but I'll go through really quickly. Net cash is just your sales minus your payments, your receipts minus your payments. And in this instance, it's a deficit of 7,000. Sorry, it's not. It's a deficit of more, so it's 44,440 minus 60,745, and I get 23,23015. Add my loan back to that, and I get sorry, no, yeah. So my net cash here, apologies, should be 7,000 and sorry, my net cash should be, yeah, should be spot on. Sorry, that was right, 23,015. Add the €16,000 loan on, and I want to add any opening cash that I have. So my opening cash here at the start of the year is going to be, so again, don't forget, this is done at the start of the year, lads. Whatever money I have at the start of the year, so my bank account, I've got €7,700. That's my opening account, 7,700. Throw all it into the calculator, and you should come up with €685 closing cash. 685, that's your opening cash here. So again, I'd recommend you do all your net cashes first. Okay, so 43,775, yeah, that's fine. So 1825 is the figure here. 8780. Again, just your receipts from taken from your payments. 5170.